Righto, g'day, money miners. Bloody Bellevue.
What are they up to, Matty?
Who would have thought that some infill grade control results could have a big chunk of an episode? But,
there's always more to it.
they're always...
As long as I don't have to talk about drill results, mate, I'm
There
happy.
is more, less, who knows? Mate, Trav, you're up to conspiracy theories in the Goldfields lithium region.
Yeah, mate, I'm just started. I'm just getting a little bit conspiratorial, mate. Something's happening.
If we just presented the facts and what is disclosed, that'd be a boring shit show. And we're not here for that. What, Mac the SPAC, Jesus Christ, some ripping copper grades to showcase what this CSA ore body is. Mate, Sandfire, AVL, manganese on the back of South 32's little port drama in the cyclone. And
We think it's time to peel back the curtain on the manganese market. What does it mean?
and a bloody bit more follow-up from Poseidon after their sale yesterday.
A bit of a leadership change.
Yeah, Matty's recruitment predictions.
Matty, why don't you get us started? Bellevue.
I will get us started, JD. Thank you for the intro, mate. High grade shoots. Mate, no, there's always a bloody superlative to sex up some infill drilling results, but the Deakin ore body, that's the motherlode at Bellevue, the old Bellevue gold project. 11 metres at 67 grams, 14 metres at 50 grams. Stonking grades, mate. The grades apparently exceed the resource estimate in the area, even though it's just a shoot, which means like a high grade section of that ore body. I guess knowing that and the purpose of this infill drilling means they can prioritise that area in the stoping sequence. Even though they're retreating, they could, you could wiggle where the access goes in to make sure that, and where the allocation of the development resources go to that side to get bloody drilling and stoping as quick as possible. So that's where they can optimise and get that shit out as quick as they can.
They use VRIFY, mate, so it's very easy to understand everything.
Oh, mate, so easy. So I probably could have told them the high-grade shoots were there because I was seeing the VRIFY model. But anyway, no harm, no done. The only thing that I guess buggers up when you are allocating the resources to get to those areas quicker is probably like random things like supply chain. And the biggest one would probably be if DSI aren't the ground support provider and they don't have the bolts and mesh to get those levels in, which are then going to delay those high-grade shoots coming out of that Deakin ore body as quick as possible. Mate, that's a message to all companies, boys. Yes. Mate, don't get everything in your favour. Don't leave anything to chance, especially ground support. You make sure DSI supplies it, because I hope all those companies that were affected by the rain that we heard had a good look at the weather a month out and chucked in those DSI orders and made sure they were there. But DSI actually have boats on the back of the ground support trucks that they can start ferrying them up in the event of flash flooding, because they're ready for anything. So
that is predictive behaviour for a company that just helps in every single way.
Get to know your weather so you can get your DSI order in. That is all you need to know. Right. Anyway, I digress. Back to Bellevue. Whenever you see these real positive drill results come out, share price is going up. Share price at an all-time high today. And
is it? Is it really?
$1.83 all-time high.
Okay, yep.
And you see them mobilising they mentioned they're mobilising another diamond drill to expedite the infill drilling of the Deakin main. You think, are they about to raise money? Because we've just seen it so many times before, when everything is going great and the share price is just ripping and a tearing. But Bellevue, they're in a bloody good position here, I believe, for a couple of reasons. I'll go into it.
Please do, Matty.
So are you getting cynical like me? You see like positive news and you're like, they're raising money.
Because you're like, beauty, everything's going good. Let's buy shares, and then bloody capital. How many times have you seen it before?
Yeah, well, famously, I think it was Red 5, like a week or 2 weeks before that they did the big $90 million raise in February last year. They did like a roadshow and said we're fully funded. So I mean, you just like, it's a period of time where sometimes the optics of what come from a company versus the realities are different. I don't think it's the same case here, but yeah.
No, but we're going right into this anyway. Don't worry about the drill results, bloody mate, because you got Aussie gold price sitting at I think cracked 3,300 Aussie this morning, gone up over $200 an ounce in a month. Because you look at they've got pretty decent exposure to it. So because they got 26,000 ounces hedged for the second half of this year at around 2,900. An ounce, and they're guiding for 75 to 85,000 ounces. So they've mined, as you can see here, 23,500 ounces already. So they need 14,000 ounces per month from here on in to hit that midpoint. And they've nearly achieved that. So, I think that might work out, $5 or $7 million extra based on an extra $200 gold price to what they hedged. So, getting the bloody benefits of that. As I said, share price has ripped in the last 1.5 months. $1.30 back up to $1.83 today. Some of that capital raising overhang was removed when they issued $30 million worth of stock to their power supplier, Zenith Energy, effectively a small capital raise. So that would have definitely helped things.
Payment in shares, mate.
Payment in shares, it's a bloody capital raise. Mate, there's short interest. Now, this is where it gets interesting. The short interest has risen from 3% to 6% since January. So the shorters will be starting to feel the pressure a bit with this latest share price increase, especially if this so-called capital raise does not happen. Now, when you start thinking about the ETFs, because they're currently in the VanEck GDXJ.
Which is the junior.
That's the junior gold one.
Yep.
But they're due to go into the VanEck GDX ETF when it's rebalanced in June.
Going to graduate.
Yeah. So six, and it's, I think, based on this little bank analysis thing we got a hold of, 68. They need to, the GDX will have to buy 64 million Belleveue shares to add them to the index. So they've got 1.18 billion shares on issue. 950 million of them are in the top 20 holders. So about 80% of the total shares on issue, which is running through all the companies, 80%'s pretty high. Genesis was about 81. A lot of them are in the 70s in terms of what the top 20 holds. So that's about 200 mil left over, and 68 mil are currently shorted, and they've got to buy 64 to go into the index, and then the GDXJ might have to actually upweight as well since the market caps increase when that rebalances. So if they don't raise and the shorters have to bail, there's potentially bloody 130 million shares or more that have to be bought.
Well, to your question, if you're saying there's like there's a bunch of factors there which might lend themselves to a squeeze of some description. If that were the case and you needed to raise, you wouldn't pull the trigger yet. You know what I mean? If you're anticipating a squeeze,
that is one reason not to raise.
Yeah,
is that if like that little prophecy comes true there with the indexes and gold continues to do what it's doing, and you don't raise, there's bloody. We'll get to one possibility at the end there on the back of that. But that's one reason not. And the other is the market perception and sticking to that, their execution plan. So if they clear the debt by operating cash flows, and then they can use even operating cash flows to clear some of their future hedge book, that will probably get a better re-rate on a per share basis without diluting all the existing shareholders.
Yeah, and
there's less bloody shares.
I don't think the timing totally stacks up either, because that waiting for the GDX would only happen in 3 months' time, and if you're talking about them having to capital raise, it's because they're having issues in the ramp up, and you'd expect, give it another 3 months' time, they'd be pretty close to seeing themselves through this sort of ramp up period.
Or their share prices at an all-time high, and they're like, take it now and raise while it is at an all-time high. That's another, irrespective of the operational side of things. So,
Do you think we would have seen the cracks by now though if they needed to raise? Do you think it's sort of because you don't really,
There's people there's directors of the company that own, decent amounts of stock. It's not in their interest to issue new script. So
well, Parson owns, what's he own?
20 million shares.
22 million shares. So nearly bloody getting close, or $40 million worth. So it's not in his interest to bloody raise money. And I think he'd have a bit of pull there, just to
I think he might do.
just thinking. So, but let's look at the option if they did raise now. Because if they raise now, like within their placement capacity, they could raise a shitload. Like they could raise enough to clear the 225 million in debt. They could even pay out a chunk of their hedge book if they want. Because after this quarter, they've committed around 234,000 ounces hedged at a gold price of 27.87.
Mate, I'm going to give you a job as a bloody investment banker after this career. You just go around, you like knock on doors like, do you need to raise money? Here's what we can do. We can pay your debt back, clear the hedge book.
Well, that
you'll be a more
book,
appealing company.
That's worth around 120 million bucks on today's gold price, that hedge book, because it's all out of the money. Yeah. So 19% of the project reserve. So you'd imagine being debt-free, less hedged.
Unhedged.
Or less hedged or complete, probably not completely unhedged. You'd see a re-rate. You'd see a bit of a re-rate there. But that's one option. But I don't
that
think
is debatable though.
You don't think if they're debt free and
unhedged? I mean, weigh it against the
cost of dilution,
the cost of dilution, as well as the lack of trust in management by saying you're not going to raise and then going and raising these things. They add up. They have an impact.
Yeah, that's a good point too. Yeah,
I don't know. After re-rate after the rate, not like I know what you're saying, like because your share price goes down when you raise. So would you re-rate to above where the share price is today?
No, but what I'm saying is that also like a company that you treat as a premium producer? Like for example, Capricorn, they trade at a premium because they do what they say they're gonna do.
Or exceed.
Yeah.
But what about Boss Energy, for instance? They did the big bulletproof raise at the high prices last year. How do you perceive that one?
I think they spun that. They did a raise, but they pitched it as acquiring a project. Of course, a bunch of that working capital probably went to honeymoon. But it was spun as something else. So I think it's a defensible thing when you've got a story to wrap it around, which if Belleveue did, they'd probably have a story.
Well, here's the other narrative.
Exploration.
Here is this story. You could buy something. They could Scrippers at an all-time high. You could buy something and tie in a bloody raise. But I guess when you've got an ore body that is absolutely going to print cash in the future, whether you raise now or not raise at all, unless you got hold of probably an ore body that is a low-risk one, like I couldn't see them complicating the business if they don't need to at this early stage until they've got a healthy bank balance. Because they will need to grow at some point, but I can't see them doing it this early.
And the lenders would have a bit of a say in the matter too.
Exactly.
Can't see them coughing up bloody 800 mil for Spartan right now. That'd be the only one that sort of makes sense on a low risk side of things. We'll wait and see, I guess. We'll just, we've seen it too many times before. Positive news, share price at an all-time high, smoke and mirrors before the real thing comes out.
I love your thinking, Matty.
Should we place bets, the three of us? Bets on whether or not, Belleveue will either directly or indirectly issue more capital before we see, results that they're, 100% definitely cash flow positive.
I'm going to throw a dart.
You're going to say?
I reckon the short squeeze is going to happen, and I reckon they'll raise capital on the back of that.
Okay. JD, what do you reckon?
So within what period?
Don't know. Whenever it happens. After, June, July?
I'd just take the other side of it then, just to make it juicy.
Yep. Yeah. I think they're over the hurdle. I think they're sailing home.
Got a carton on the line now.
Oh, a carton?
Let's do it.
Nah, it's a long shot, but fuck me. Imagine if share price if it does squeeze and they go up to bloody $2.50 or something. Like
it wouldn't even be
and you got a couple $100 million in debt sitting there. Jesus, it'd be tempting.
Yeah, it wouldn't be that massively dilutionary.
Not if you get up to that. Not if you get up to that price, and I just don't think it'd be. Yeah, I know what you're saying about the perception of management saying one thing and doing the other, but fuck, if the share price goes up, squeezes up high, and you've got the opportunity to take away a lot of risk of the business with debt,
clear the books.
It'd be bloody tempting.
Would you say that though that risk is like largely like it becomes the risk becomes rapidly smaller if if you pass that commissioning phase. If all of a sudden ramp up sort of smooth, you're getting to steady state, you're accessing, like, you've got good grade running through the mill, you're getting all of the metrics that you want to see. The risk is like relatively small after that point.
You get a bit of a tax shield as well on your interest payments to make the profits
that's true
a
too.
little cushioned, you know. So
it's the only risk is that it's one operation.
Yeah, absolutely.
That's where the risk comes in. Like you look at, I think we talked about Westgold. They got numerous operations where if one shit itself, there'd still be gold coming out. Whereas you got a highly focused one operation, there is that added level of risk.
And the Westgold like case study is like an interesting one, to your point on the appeal of being a debt-free, unhedged gold producer in a rising gold market. Look what it's done to the share price performance of that company.
Good stuff, lads.
6% assured as thinking they are going to raise, I would say, and they're getting burnt.
Definitely.
You don't have to take action on what I say, Darren. But geez, if you do, it'd be hilarious.
You could swing him half a carton, mate.
Yeah, mate. Jeez, it'd make me look good.
Alrighty, lithium, Trav, you got into a bit going on on the back of what Mins did yesterday, and in the region we've got Global, we've got Big Bill.
Something's going on, mate. So I don't know what's going on, but something's going on here.
Lithium Bill.
I want to point to 2 social media posts in the last 2 days, gentlemen, and both of these have surfaced post MinRes's announced deal to pick up Lake Johnson off of Poseidon. First one, Bill Beeman on LinkedIn. He pasted the first page of the MinRes announcement, and he says, MinRes deal today on creating lithium processing is a great outcome for our region. It potentially gives developers Pioneer deposit another processing option. Cool. Second one was Global Lithium's Twitter account today. They also screenshot the MinRes announcement, just like Bill did. And they say, MinRes, one of our major shareholders, intends to develop Lake Johnson as a lithium processing hub in the Southern Goldfields region. A smart move, and one which will add value to the broader Goldfields region in terms of future lithium production. So, I don't know. Something's going on here. Neither of these companies are MinRes. Both of them do have MinRes as major shareholders of their companies.
For the moment.
Yeah, but the weird thing is, like both Manna and Pioneer Dome, certainly with Manna, both Mount Marion and Bald Hill are way closer than Lake Johnson is. And then Pioneer Dome, I think you did the trucking distance in your
was
yesterday's episode.
170 Ks, I think.
So it was even that was further away. So like in neither of their cases is the Lake Johnson infrastructure going to be closest. Maybe it'll have more suitable processing because of the flotation. I don't know, but I just found it strange, and it was just like here's two. There's a lot of similarities, both snipping the same thing, both with a comment. Just something's going on here.
Yeah, and I probably should have read into this more, but I don't know how much capacity is at, like, if Mount Marion and Bald Hill, the mines are going hammer and tong. Are those processing plants going to have the capacity to take Pioneer Dome and Global Lithium, or have they got to be a bit selective? I'm not sure.
Remains to be seen. It hasn't even been that long that MinRes have had their hands on Bald Hill. I'm sure they're still getting a good feel for what the mine plan is going to look like. But they were talking about getting those numbers up pretty quickly in the last call.
Yeah.
And on Global Lithium specifically, I noticed they did an East Coast roadshow when every other company was at the Roto conference instead last week. So, and I can't figure out for the life of me how they still have assays pending for 47 drill holes relating to their drilling program, which completed on the 8th of December last year. That's 102 days since their drilling completed, but they still have not uploaded the assays for. So I've not heard of a company experiencing lab delays of 3 months, like, ever, even when you had, the crazy lab delays back in, was it 21?
Yeah.
When exploration was just going bonkers. Even back then, I don't even think there was a 3-month delay. Like, those were like 6-week delays, 8-week delays, not 12-week, 13-week delays. Like, something's going on here. Global Lithium, they've got $36 million cash at the end of December. So they'll need some more cash at some point, but you look at that number and you think they're not desperate. So I'm watching with suspicious eyes. They own 10% of Kairos, as well, by the way. So there could be some consolidation in the works there, but I'm just awfully fucking suspicious.
That's the only way you look at these things.
Don't blame you, Trav. We are suspicious of mining. Anything mining on the stock market, we are suspicious of it. Something is going on.
If your company is South 32, I'm suspicious of you.
Yeah.
Joking.
Oh, mate, I'll tell you one thing that'll be happening on the back of all these little conspiracies you've got going on, Trav. If there is something going on, mate, there is going to be an absolute shitload of Brooks King Airs and Brooks Learjets flying over the goldfields. Mate, they're going to be flat out. Mate, that Kambalda Airport, that Lake Johnston airstrip, whatever other shit airstrip there is in the region, they're going to be littered with Brooks Airways planes, reviving the district. Mate, I don't know who else they'd call. Who else they'd even think to rely on to get the workers into the goldfields, mate? The Land Cruiser of the sky, the Brooks King Air, reviving the goldfields and reviving the lithium industry. I can see it happening already.
Why are MinRes even bothering with MinRes Air? Just get in touch with Brooks. They'll sort it out for you.
Mate, until there's bulk automation, JD, you need people and you need Brooks Airways to get them there anywhere in WA. This one's way more guaranteed than Belleveue raising money in a few months. I can tell you that.
Just one phone
Brooks
call.
is just a bit less corporate, you know. You can jump on the plane and you think you're going to Perth and you'd be like, I wouldn't mind a holiday at Esperance. They just take you to Esperance
Mate,
instead.
you can get on there naked if you want. Bloody, mate, they're pretty cruisy. Yeah.
On that note, let's talk about MAC the SPAC.
MAC the SPAC, or Metals Acquisition Limited.
Does this fly in the face of your suspicion? Some of these numbers were pretty good.
Yeah, well, I think
We've been suspicious in the past of these guys,
they've
but
probably already got, yeah.
Oh, they were just waiting in the core shed to...
Just sitting, they're just sitting next to the Global Lithium core.
Don't be so suspicious, Matty.
Mate, they're because they're aiming at the CSA mining Cobar, and I've said it's one of the previously it's one of the highest grade copper mines in the world historically. Mate, they're aiming to expand the current resource, some bloody impressive copper grades, which highlights the quality of this asset. 16 metres at 10.4%. Copper, 19.2 at 10.4, 11.5 at 11.8%. Mate, if you compare those to some of the other copper producers and developers on the ASX, for the money miners out there that want to know a bit about copper grades, if I just went to AIC, they had a new discovery at Swagman not long ago, 9.8 metres at 2.1%, 4 metres at 2.8. Some have developed Woodlawn results, 4.7 metres at 8.8% copper equivalent, but that was 7.4% copper. 75 metres at 2.1% copper. Mate, it even went back to the Sandfire days, the early Conductor one. That was one of the big ore bodies up the top. 35 metres at 6.9%. So it shows these holes at CSA are pretty bloody. They're one of the highest grades you'll see around the world. Their current reserve is 7.9 million tonne at 4% copper. That's the reserve.
Yeah. So they've got about 5 years left of mine life at the moment. Granted, you got to caveat what you've said with the fact that they're pretty deep.
Oh, mate,
at the moment.
It's one of them ones that looks like it's just going to go to the centre of the earth. They got the offset as well, which I'll bring up here, which they're drilling out now to see if that extends. Mate, Ivanhoe, you want to, so 8 million tonne at 4%. Just to old Robert Friedland's Ivanhoe's Kamoa-Kakula in the great holiday destination of Democratic Republic of Congo. 2020 reserve, 245 million tonne at 4.63% copper. So I would say that is the best copper mine in the world.
Outstanding.
That is pretty bloody phenomenal. So CSA produces 40,000 tonnes of copper per annum. Kamoa-Kakula, 400 to 450,000 tonne of copper per annum. Just a casual tenfold difference. But the grade of CSA gets offset a bit by the depth. So down to about 1,800 metres now, up there with Gwalia. And it'll likely just keep going to the centre of the earth. So you need very high grade to pay for the depth you work at. From what I know, they have a shaft there, but it's about a third of the way down. So they've got to truck it all up to that shaft to get it up the remainder. And I think if the shaft shits itself, they can't actually truck it out of the hole. So, just deep mines takes a long time to get the miners in and out each day. A lot more ground support. So it does come with its challenges. But mate, grade is king. So you can see what MAC are trying to do here. Pretty similar, emulating what your Northern Star did when they took over. Like Jundee and the Barrick assets and that. Took it over from a big company, focusing a lot on, productivity improvements, lower the operating costs because the ore's there, it stays there. The only thing you can do with it now is bloody optimise the joint and make it cheaper to get out and more efficient. So jumbos, loaders, trucks, improving the utilisation. So, mate, that's what happens. They bought it off a big miner, optimise it to suit a smaller miner. So, mate, this is looking forward to seeing how this operation performs into the future. But yeah,
Me too.
Love a good high grade joint.
Escondida, 1 million tonnes per annum, Matty. Big.
Oh, it's funny. It used to be like 1.4.
Yep.
Yeah.
Yeah,
It's about 0.5 gram now or something.
0.5%. Yeah.
0.5% rather.
Yeah, we're talking copper.
I'd rather-
Mate, get the gold out of your head, JD.
Alrighty. Well, let's stay on the theme of copper. Sandfire. They signed a new revolver with ANZ, City, Natixis, and SocGen. So US $200 million. It's essentially refinancing. They're going to repay US $88 million of the MATSA syndicated debt facility that they signed a couple of years back, and the rest is for general corporate purposes. So it reduces their repayments in this financial year by 20 million. Next financial year is reduced by 68 million. And then the following financial year, FY26, is increased by US 88 million. So unfortunately, they don't care to share what they're actually paying on this one so far, plus a fixed margin.
Mate, I said I'd get grumpy next time I saw that. I'm fucking...
Trav's grumpy.
He's grumpy now.
Not fucking happy.
Yeah. So 31-month term on this one. And you can sort of see from the chart will flash up that the new debt essentially just pushes out that maturity, that profile a little bit. So
This is fully drawn, right? Like...
yes.
Yeah, so they're adding more leverage to the capital structure as well. If you're repaying $88 million in outstanding debt and you're drawing down to 200, then you've got a 112 million more debt than you had drawn before.
Yeah, so they reported net debt as at 31st Jan of US 495 million. If you look at some of the multiples they're trading on now, 1.25 times consensus broker NAV and 6 times FY25 EBITDA. So looking through some of the individual broker reports, I can see things like valuations of 1.2 times NPV, or another one showing a 50-50 blend of 2 NPV calcs, one incorporating spot, the other using broker commodity forecast. So you're starting to see some of that sort of stuff. But if the copper price keeps going the way it's been trending the last couple of weeks, then so will Sandfire. And you can see with stronger cash flows over the coming periods, as well as the capex reducing as they sort of come out of this period of heightened investment across their portfolio of assets, the overall free cash flow should be good and should allow them to de-lever the business quite a bit and set them up quite well.
With the trading multiple being like 1.25 times NAV, I think there's this like dynamic. You saw it in uranium, right? Oftentimes the analysts are constrained valuing it using their the deck that's set by the bank.
Commodity price
forecast. They don't get to choose the deck, and often those price forecasts basically they play catch up versus the spot price. So.
100%. It's always, and you can sort of see it in the reflection of the 50-50 blend there. People are starting to tinker with these things, so it's always worth, opening the hood up and seeing what they're doing, what the commodity prices that they're running through these things are, to get a feel of what NAV actually means for that individual report.
Beauty, right, boys. AVL. It's like the old AVL with double the land and half the conference attendances. Our favourite ASX Vanadium
You
stock.
could go to twice the number of conferences if you wanted to.
They could now. Yeah, they got twice the amount of board.
They have the manpower.
Mate, they could divide and conquer.
Yeah.
Yeah, good thinking. Righto, boys, what's going on here?
Well, they do get to pay half the ASX listing fee, so that's a bonus, mate.
There you go.
It's our
Don't get
favourite.
away from that.
Oh, they make up for that, don't worry.
Our favourite ASX Vanadium stock. They might be. Are they the only ASX Vanadium stock now? I'm not sure. There might be others.
Oh, there's Richmond Vanadium. There's
You're across it, mate.
who else there is? Anyway.
For context, AVL share price is unfortunately down 15% the last 12 months, but on the plus side...
50?
50, sorry.
50%.
50, yeah.
Don't undercall it.
On the plus side, they've just added to the All Ords index thanks to the merger with TMT. But today's news is that the company's produced its first high-purity vanadium electrolyte for use in vanadium flow batteries at its electrolyte manufacturing facility, if that's a mouthful. Don't worry, I don't really want to talk about that. I'm keen to discuss something else, which the astute shareholder would have picked up on, but despite not reading it in an ASX release yet. On the TMT side of that deal, when the two companies merged, one of their recent work streams was environmental permitting relating to the Gabonintha development envelope. This was one of the news flow catalysts that shareholders were sort of looking forward to in 2024. Environmental permitting is it's not super straightforward where they want to do it and the way they want to do it, and with some of the considerations in that region can take a long time, right? But if you go to the appeals Covenant website, you can see that there's been an appeal submitted in relation to the latest environmental review document, and I'm not sure how much to read into this, given the plans for the merged entity are likely to look different compared to what was submitted. But I think it highlights the challenges that are ahead in developing this vanadium project.
Vanadium's going to be an interesting one. Because if there's more talk about nuclear, there's less need for this. If you're talking about energy storage.
Battery storage.
Yeah.
Yeah. It's probably worth an episode in and of itself, those sort of fringe battery technologies.
Yeah, well, this is the vanadium flow battery is for base load power storage.
Yeah.
Like it's not a home thing. They're bigger. They're for, it could be a camp at a mine site or industrial commercial purposes, not for the small scale, but if you've got cheap baseload power, you don't really need it. So
absolutely.
Anyway.
Talking about industrial metals.
Just got to get uranium in there somehow.
Let's chat about manganese now. So
manganese.
So we touched on South 32 yesterday, and I wanted to circle back and just get a bit more of a feel for what Groote Eyslandt, contributes to global manganese supply and how that Gemco JV sits on the cost curve. So
you're looking at right. If you take it out of the equation, is there a bloody manganese supply issue right now?
Yeah, absolutely. I mean, there has been pretty varying reports about the state of the wharf and other infrastructure on the island just off the coast of the Northern Territory there. So I thought it was worth just scratching around a bit and having a look.
I saw a couple of updates on that front, JD. There was this article out from NT News with some interesting quotes. NT News, do you remember, I don't know if you guys ever, that was like, people would always joke about the headlines in NT News because it'd be like crocodile runs through city. There's all crocodile articles in that one. Yeah. I've actually got some.
It's like the West Australian, but instead of
it's just croc news.
Bikies, it's crocodiles.
Yeah, exactly. Running havoc on the city. Okay, anyway, there's this article out, and a Gemco employee said Groote Eyslandt and the neighbouring mine site had, in quotation marks, received massive damage after Tropical Cyclone Megan swept through. He said Port Wharf had been severely damaged and speculated it could take months to repair, preventing ore from being loaded onto ships. The roads are damaged to an extensive level and no trains will be able to haul ore to the port for many months. He said the mine pits are full of water and are unable to be pumped out due to the loss of pumps, generators, etc. So all this poses the question, if Gemco production is out of action for 1 month, 2 months, like heaven forbid, like longer, what are the implications for the global manganese market? How big is Gemco in the context of global production, and does that have some real implications on that everyone or anyone mining that product?
Yeah, let's try and answer that question and a few others. And if you wanted to see some pictures, you can watch yesterday's episode. I think we chucked in quite a few pictures around the unfortunate damage that's taken place on Groote Eyslandt. So the first question I think we should answer is, how does it sit within global manganese supply? And it's a pretty big player. It sits low on the cost curve, very much within that first quartile of cost. It makes up 15% of the world's high-grade manganese supply.
Ooh.
Now, remember, Gemco is a 60-40 JV between S32 and Anglo. And in this, we'll chuck up a chart of exports globally. This came from a recent South 32 deck. And you can see that Australia portion that sits there, that is entirely Gemco. So if Gemco were unable to export for a period, there would clearly be a disruption to global supply.
Yeah, and like it's sort of the significance of Gemco is echoed in Graham Kerr's comments in South 32's latest call. where he says, "We believe that GEMCO is still the best manganese operation in the world. It has a life expectancy at the moment that, depending on what happens around some future areas, is somewhere between 6 to 8 years." And I think you can, when you look at the island and they want to start developing some of the southern leases there, there's probably a lot more manganese ore they could draw upon, but there are just more environmental challenges in order to actually develop those areas, I understand.
Yeah, we'll throw up the map here and you can see the various eastern, western and southern tenements that they have. So, yeah, we know GEMCO 15% of global production, and we can assume, there's a 15% supply shock there, at least for quite a short-term period, and we'll see how long that kind of lasts. And the question is, can existing producers easily ramp up supply and diminish the impact of a disruption and a commodity price squeeze there?
Because like 15% of global supply is a lot to just kind of abruptly go off, right? Like you kind of think, geez, what are the implications of that? And I don't know the answer to your question, JD, but there are some considerations around the ability for other producers to ramp up, for example, like what do inventories look like, all those sort of questions, like how much torque do you get as a result of some of these softer
It's all
factors.
about the torque.
Love that word.
It's so good.
A new favourite word.
Yeah.
It's a good one.
And you can get some insight from the management commentary in analyst calls from some of the manganese producers out there. And if you look at Eramet, for example, they actually halted production of manganese ore from their Gabon mine mid-2023 because of a military coup on the country. Eramet, other than South32, they're the other major producer of manganese ore globally. And granted, this shutdown of their mine, it wasn't for too long. It was only like a week of production impact tops. Eramet's share price fell 18% on the news. But despite that, like you didn't really see manganese ore price really move too much.
I'll chuck up another chart here as well, Trav. You can see this is also from a recent South32 report, I think from last month's earnings. And you can see on a 2-year trend in the price, they show 2 commonly quoted grades. And in the background, you can also see the drawdown in stockpiles that has occurred. So they're showing, for those listening to the podcast, a stockpile in low grade, medium grade and high grade product. And in terms of pricing, you can see from Jan 22, the price starting at about $6 per tonne. It peaked up to about $8 briefly, but it's now sitting around $4. So the trend has been coming down over that 2-year period.
And look, if you look at the production out of South Africa, you when you understand how that works, so like South Africa is logistics constrained in a lot of ways. There's limited amount of supply that can actually go out via rail, and a whole bunch of the extra supply basically has to get trucked 1,000 kilometres to port in a lot of instances, which isn't ideal, but that kind of just paints a picture of where the constraints exist in the system.
And you can see in reports from other producers that some of the trucking costs and whatnot have been heightened as well. And just to put a bow on this and this little manganese segment, you can see some juniors have already decided to pounce on the opportunity in manganese. So Mako Gold came out this morning with wide manganese bands expanding to depth. No, they didn't want to waste an opportunity to flog off a secondary project that they've got. Good on you, Mako.
Oh, love it. But Poseidon, we talked about him yesterday. We've talked about him today. Poseidon, mate, talk about in the news. But on the back of yesterday's announcement that MinRes are buying Lake Johnston off them, the company has today announced management changes. CEO Craig Jones is departing to pursue other opportunities, and CFO Brendan Shalders is stepping up from CFO to CEO. So, mate, I predict other opportunities. What's out there? I would reckon he's going to be popping up at Spartan to develop that project. He's an underground specialist. I reckon that mine, that company, has his name all over it.
A bit of Northern Star in his background too.
Yeah, mate, they all will. When I was at Paulson's for my short period, Craig Jones was the GM. Simon Lawson's was the geologist.
They would have learned everything they know of you, mate. I reckon.
Mate, yeah, at the pub. That was the only thing I had to offer in that young time of my mining career.
Good stuff, Matty.
He's probably not joining another nickel company, put it that way.
No, I don't think so.
Well, they've got a bit of cash in the account now at Poseidon, so they'll be, at least got the lights on for short term.
They got the lights on. We go on to conferences.
Alrighty.
Thanks to all the partners as always. Who we had at the top of the show? We had the great DSI.
We did, and we also had Brooks
Airways, reviving lithium in the goldfields.
Yes.
Mate, we've also got VRIFY, GetWet Solutions, SMEC, Power and Technology, Anytime Exploration Services, KCA Site Services,
and K-Drill.
oh yeah.
Hooroo, money miners.
Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.